All right, we should be live. Welcome back, everybody. Just give me a quick confirmation that you can hear me on the microphone and you can see my screen. And we shall shortly proceed. How is everybody? All good? Feels like an age since I last streamed. The last stream was, I think, at the start of July. First few weeks of July. And really, all that's happened is that we've been within this range, the upper bound of the range. Feels good. Yeah, good to see some familiar faces. Thank you for tuning in, as always. As you know, today's stream is sponsored by myself. So that's a refreshing change. Thanks. I've missed many of you as well. I've been somewhat busy with the charity mentorship, which was initially supposed to be 4 weeks. Classic XO has extended it all the way to 6 months. Not sure how it's happened, but there you go. Biting off more than I can chew. SC's in the house as well. Is he in the house, SC? All right, excellent. All right, so first things first, I think looking at Bitcoin, what's everybody's thoughts? Let's get some sentiments. Do we think we're close to a top on Bitcoin, or do we think we're going much higher? Give me some price targets. What are we thinking? Let me see some numbers. Top is in, 130, 140, 150, 200 by the end of the year. Or are we close to a top? What's the thoughts? Let's start off with some light-hearted banter. All right, I've got one person saying close to a top, another one saying we've topped, 150, 170, 140, 109, 140 area. Okay, interesting. Interesting. Yeah, I think, look, in all honesty, my view is throughout my career as a trader, I've never been ever obsessed with calling a top on Bitcoin. I should say I've been fortunate that when I have shorted, it just happened to be at the top in hindsight, okay? I think that's one of the key aspects. I don't look at Bitcoin and assume that, oh yeah, look, I think we're close to a top here. I think for me, it's a case of, all right, we're at high time resistance, we've swing failed the highs, I'm looking to become a seller. I've had 2 attempts at shorting Bitcoin from the highs, I've taken profit on both, okay? As opposed to, yes, I think the top is in, because in all honesty, I don't know. I couldn't tell you. And I think it's one of those aspects where, unless there's a real shift in macro conditions, which clearly there isn't, I still think, you know, following my good friend Global Flows or Capital Flows, and many others who think inflationary risk is greater than a recessionary risk. So, you know, but for me, it doesn't really matter too much because I really look to play the market from one level to the next. And the reason I do that is because why? Why do I play the market from one level to the next? Because I simply want to find a good way to manage my risk. Now, if you've tuned in for investment advice, or for me to tell you that Bitcoin's going to go to $253,000, $400,000, I'm sure it will at some point. You're probably better off following Sailor or Plan B. The main emphasis of these streams this year has purely been more from a trading perspective, especially for those of you who are looking to trade futures. So, you know, that's what I want to push out there. Essentially, my view of the market, how I look to trade the markets in a very digestible way without really going to the depths of order flow, footprint, market profile, the DOM, the ladder, because I can appreciate many of you don't really have that experience or that knowledge, and that's fine. There's nothing wrong with that. There are traders out there who have made a successful living using something like a VWAP with a set of moving averages and relative volume. All right, so it's all about finding your type, your style of trading is essentially what matters the most. Now, let's just take it a step back. When I look at the Bitcoin chart, I think to myself, all right, from a structural perspective, and again, let me just maybe just bring up a different chart or a clean chart to begin with. When I look at the chart here, and one of the key things I've always talked about, in fact, I discussed this on last night's private stream with the mentorship members in the charity mentorship, is that when you look at Bitcoin, and again, this isn't set in stone, but it's like an early indication for me. And that is, when you look at the monthly chart, let's always start from the top down. Let's just look at the candle structures, the candle formations, and then think about the probabilistic scenarios. Okay, what if this happens? What does it mean for price? And else that. I always approach markets from an if, else, then, okay? Now, one of the key things that I've always discussed, when you look at the monthly chart, it's clearly evident that when you have, on a monthly time frame, consecutive wicks, okay, not just a small wick, but a fairly elongated spike where price finds rejection, whether it's from the upside or from the downside, okay, and it closes back above on a monthly time frame, that's the first thing I look for on the chart. Okay, are we seeing aggressive continuation, and are we seeing momentum stalling? If you look at previous tops and bottoms, okay, or key inflection points, we had one here, we had another one here, okay, not so much at the lows, okay, but then again, if you look at the consolidation phase where, like I said, throughout 2024, many people assume that the top is in, that this is all going to roll over. But at the end of the day, the way that I look at it is, it was just a corrective phase in the market. We were looking for longs. And essentially, if you look at what the wicks, the structure of the wicks, okay, what they're exhibiting is buyers stepping into the market, just like they did here, okay? And then what do we find? We find another local top. We had one rejection, a second rejection. What did the market do? Corrected. Then look at the lows, okay? 1, 2, 3 monthly wicks. Again, people calling for a top. What happens with price? Price is continuation higher. Now, this is where I would probably use the word caution, okay? This isn't, again, trying to iterate that, oh, I think this is over, which many people are doing. Practically, I couldn't give a fuck, okay? Whether the top is in or not, all that matters to me is, what's the next trading opportunity? How can I look at the market objectively? And from everything that I've learned over the last 7, 8, 9 years, I'm looking to improve year upon year. If I'm not seeing improvements in my own game, then clearly I'm not working hard at my own game. Okay, and that's not just technically, but from a process perspective, from a journaling perspective, from looking at my mistakes in the past and looking at what I've done well. And one of the things that I feel I've done well, okay, and again, like I said, it's not set in stone, is that identifying the possibility that, look, okay, we've had the June monthly candle push into new all-time highs at 123, and it closed at 115s. Again, we've pushed up into 120, just around about 124, and we're already below the monthly open, okay? So the question is this another rejection before we get a correction? And if there is a correction, how are you prepared for that downside scenario, okay? Not whether it's a top, okay, I couldn't care, but the question is, if there is a correction, then which levels am I looking to buy, all right? So that's something that I think is worth taking into consideration. And the key for me is currently we've got 10 or so days left of the month. If this closes below, say, 116, 117, you know, somewhere around there, then I think there's a fairly decent chance that, okay, look, in the following month, in September, we might get another wick up, which gets rejected, but below here, then I think you've got to be open to the possibility that we could see a deeper correction down into previous levels. But I think the one key level that stands out for me, just purely looking at this from a SR perspective, is this level here, okay? This one here, that 109, 108 level is key for me. That's the key level, because below here essentially brings us back into this range. Now, that's not to say that we have to go all the way back down to 78, but you're looking for some form of correction, taking the mid at some point. But we'll build towards that picture slowly. Okay, but all I wanted to do was just give you a high time frame view and just looking at areas where there could be points of invalidation where you may want to think about hedging for downside risk in the market. All right. Now, from a levels perspective, going on to the weekly, I think these are some of the cleanest levels that I've traded. One of my key projections, again, this isn't about, oh, look, I call this that we're going to go to the all-time highs, okay? It's about, okay, from a range projection off this key mid-level, we are into these highs. So if we want to see targets of 130, 140, now let's talk about the upside. Essentially, I would personally, if I'm looking for longs and looking for that continuation higher, this is the zone that I'm focusing on right now, just as it stands, okay? I'm not talking about price trading back down into 108s or 98s. I'm not even talking about higher prices. All that I care about at this moment in time is from 124s down into 109s. Okay, that's all I'm bothered about from a trading perspective. As for Bitcoin from a spot perspective, I still hold my Bitcoin spot exposure. Okay, if I find a reason to hedge, then I will hedge my Bitcoin spot. Okay, because I don't wish to sell my spot. Are we all clear? So when we really look at this, and when you go back to June, essentially when we broke out, so you can see how price has rejected from this level. Okay, we took out these highs, one rejection, a second one, a third, a fourth, and then eventually we get the thrust candle up trading higher. This consolidation here, or this compression, is what led the market higher. We took out this high. So this 110 level is key for me, that such that if we trade into here from a high time frame perspective, this is certainly one area where I'm looking to do business from a long perspective. Okay, I don't mind price slightly wicking below it, but from a risk to reward perspective, if this can hold, that gives me some sort of level that I can think about from an execution point of view. The way that I trade, again, I've talked about this for the last 2-3 years, is that on the candlestick chart, I start off on a candlestick chart, I map out my high time frame levels, top-down analysis, okay, and then I look at market profile, and then I look at the order flow in terms of footprints, the DOM on the ladder purely for execution. I'm looking for those confluences to give me a reason to execute the trades, okay? I want to see signs of absorption or seller exhaustion, high delta, high relative volume, high spikes of volatility, where buyers are able to absorb any aggressive selling, okay? And that aggressive selling doesn't necessarily mean it's shorts opening, okay? Aggressive selling can essentially mean something as simple as this. Let's talk about a classic example of what that could entail. Okay, looking at the chart, let's just go to the daily or even the 4-hour. Now, if you think about it, anybody who's potentially positioned into the market today, right? If you're trading this market, where are you going to place your stops? Are you going to have your stops at the recent lows? Are you going to place your stop at these lows here? Okay. So the question is, if your stops are here, and some of you may even have further room to allow for your stops to rest there as well, okay? But the point is, people assume that when the market is selling off, it's shorts piling in. Not necessarily, okay? It can be essentially longs being forced to close. So once price is offside for these participants, well, their stops are there. If they're buyers, what do they do to close out the trade? They become a seller. That's what causes the selling pressure to the downside. And then those who have their stops here, what happens there? They also then start getting triggered, okay? So that's what causes that spike in volatility, the spike in volume. What you're then looking for, okay, and this is that key level that I keep talking about. This is a consolidation that we had from the previous range, okay? If this was all the range-bound price action that we saw before we saw a break above the level, retest and rally, this was the initiative aspect of price, okay? So what was the origin for the move to all-time highs? It was this zone here, wasn't it? Therefore, okay, from a level perspective that I'm interested in looking for longs is there enough momentum to make these positions puke into this zone here, right? So I'm looking at 111s to 110.5. Potentially we might get a wick lower down, okay? We could fill in some of this inefficiency here. But ultimately, I'm looking for a reaction around this level, okay? Now, what's key, just because there's a level there, and if there are aggressive markets selling into this zone, how do you know for certain that this is the zone that's going to hold, or whether we just absolutely shit through this level and go straight down into 107s, potentially 105s, okay? They're the key levels that I can see that stand out. How do you know, or what can increase the probability that actually, you know, this is a level that is going to give me confidence that I can hit the trade and execute? You're not going to get that on a candlestick chart. You're not going to see that, okay, on a candlestick chart, because you're essentially trading with one hand behind your back, because you don't know whether this level is going to hold, or what certain people call, oh, look, price, look, here's a concept which I think is flawed. Price traded this level and it took the liquidity. All right, it took the liquidity and it pushed away. If the so-called large players took liquidity, but then price rolls over, then what the fuck happened to this liquidity grab that was supposed to be bullish? Why did price shit through the level? Because what, all of a sudden, they took the liquidity and they thought, oh, you know what? I've changed my mind. Let me become a seller. Resting liquidity is not what moves price, okay? It's market orders, aggressive participants lifting the offers, okay? And those late shorts that are probably piling in here, and those who've been potentially stopped out of their position are now looking to get back into the market. And anybody who's shorting these lows and gets trapped on high delta with signs of buyer absorption, that's limit orders essentially soaking up any aggressive selling, that's what's going to stop price from trading lower down, such that demand exceeds supply. And you will see that on the DOM, on the ladder, okay? That will give you your confluence that if you're seeing a fuck ton of aggressive selling at these lows, and if you think about it from an effort point of view, from a momentum point of view, from a volume traded at that level, if there's a shit ton of volume, selling volume happening here, but price can't push lower, that's the first sign that, hang on a minute, this level could potentially hold. And we are now seeing aggressive shorts opening into the level, maybe by looking at open interest rising with CVD going down. Okay, that's one way you can identify aggressive selling at the level. And so those shorts then become trapped. And anybody who starts lifting the offers, well, what would you do if you're going to short the lows? You're going to puke your position. And that's what gives you that fast, aggressive move back up again. Just like we had here. Everything that I've seen from a price action perspective, this was the key range for me, okay? The core of the volume was here. Every move up has been shorts getting squeezed, late longs piling in, and what happens? The exact opposite. Why was it that price could not break out and go even higher? Because there wasn't really any buyer intent. There was no initiative price action here. This is all one big trading range. And if it looks like a range and it trades like a range, why would you want to become bearish at the extremes of the low? And why would you want to become sentimentally, if you look at the sentiment on the timeline, everybody's celebrating these highs. But all it took was half a day. 7 days later, we're down at these lows, and you can see the flip on the sentiment on the timeline now. People are calling top. Last week, everybody was calling, well, not everybody, but there were loud calls for Ether's going to go to 10K, Bitcoin's going to go to 140. So just look at how the sentiment shifts. People's opinions doesn't matter. The market doesn't give a fuck about what I think or what you think or what anybody else thinks, okay? The market will do what it wants to do, okay? And that's, you've got an array of participants. You've got scalpers, you've got day traders, you've got intraday traders, intra-week, you've got positional traders, you've got commercial traders, and it's your commercial traders, your large entities are essentially the ones that move price. Not people like you and me with maybe, you know, a few $100,000 or $1 million worth of positions. Sure, that's going to help, but the big moves are essentially by those commercial entities. Okay, they're the ones that really move price. And so you're really looking for signs of, all right, is there enough buyer interest at these lows to absorb price if we trade into this level here, okay? So whether we do, whether we're not, you know, this could, of course, be the local low in. I'm not sure. I couldn't tell you for certain. I don't have a position on Bitcoin from a long perspective. As somebody who's shorted from over here, and as somebody who shorted 123s upon this swing fail, okay, I've closed out most of my shorts now. I'm now looking for longs because, as far as I'm concerned, it's still a range-bound environment until we see significant enough reason of acceptance below here, rejection on the underside, and then I can think about, right, okay, we're now going to be trading this range here, okay? That's it. But this does not come into play for as long as this level is respected. And even then, okay, even then, we could see aggressive selling becoming a swing fail and price reclaiming the level, which should hopefully give confirmation of that's actually a safe trigger with a clear invalidation. And you're looking for a mean reversion play back to the mid levels around about 117, all right? That's what I would be thinking. I'm looking for signs of absorption if we do happen to come down and trade into this level over the next day or two. If we don't, that's absolutely fine. The other scenario, which I haven't quite planned out yet, is, all right, looking at these lows here, you know, whether we don't trade this and whether we push up first, because if you look at price on a 1 hour perspective, it's actually very clean level to level price action. There's one zone, okay? Here's another zone. So that, you can see the shift in this entire move up. We've almost retraced the entirety of this move from the 2nd of August. And then you've got this level here. So for me, if we get a break below here, then I think there's a very good chance that we could see this 110, 109 level come into play. Maybe even as far as this origin of this move up, this expansion above consolidation and continuation. But essentially, I would want to see price find a level of demand at this zone here, okay? Because look at the clean confluence that we have from an SR perspective, and such that if this was a consolidation before we saw higher prices, then all we're essentially getting is a retest of this level, okay, before we can trade it back inside of this range. Essentially responsive price action, okay? Range high, range lows, okay? Until this dynamic or environment shifts, can we then talk about this, or can we then talk about this? That's all I'm looking to do from a trading perspective. Is that clear? At this moment in time, I don't have a clear trade execution. Any questions so far? So TLDR, I'm looking for essentially one more push lower down as a trade setup. If the trade setup comes, great, I'm in business. Now, one thing you have to remember, okay, you have to be fluid in your thought process. Just because I'm interested in doing business in this zone here, okay? As price comes into it, it's decision time. If I see price coming into this zone here and trading through it, does that mean I'm going to execute the trade blindly? No, I'm not. It was a level that I want to trade, but I never got a reason to execute the trade. And therefore, if I see price trading through that level, I'm potentially avoiding a loss. Now, just because it's trading through the level doesn't mean that I have to now short it all the way down or short on the other side of it. Because for me, it's not a setup that I wanted to take. It was a level of interest where I want to execute my trade. I need to see a reason to execute my trade. But if price trades through that level, then I have no reason to step into the trade until further information. Okay, so that's my thoughts. Now, could Bitcoin bounce from me? Yes, it absolutely could. I may not even get my trade set up. That's just the nature of the game. I want to trade my strategy. I want to trade my playbook, okay? When I look at price, I generally look for relative volume spikes into key zones. And I'm not really getting that. I'm not really seeing that just yet. Okay, look at these high volume spikes in this instance. It's still fairly subdued. So, you know, we could just essentially trade this zone here over the next few days. I know we've got some news coming out on Friday, another information coming out later this week. So let's see. Do we get a run of 114.7 before another leg down. We'll have to wait and see. All right. Just give me 1 second, please. All right, any questions so far? Does it make sense? And that's why I think for me, when I look at order flow, it really gives me further clarity as to how price is reacting at that level, okay? Can you explain the reasoning behind the shorts that you took? I'd rather not, because that's just going down on a whole new segment. I'd rather just look forward now in terms of viable trading setups. So let's just go down to the 1 hour chart here. Very simply put, I think in all honesty, when you look at price action here, this zone here is key for me, because again, on yesterday's stream, there was something that I pointed out, and I'll point it out again for the sake of viewers on this stream. If you look at this high here, and let's just take into consideration this zone here. Where did price retest? Literally, okay, at this high, before we pushed away, took out the highs and came back down. Now, a similar example for me is, can anybody remember? Yeah, it was over here. Right? Very similar structure. Range consolidation. We break out, okay, of this range, which was there for a couple of months. Consolidation, and there's the impulse into new all-time highs. So when you map out how price reacted at this zone, okay, this is a consolidation where I wanted to see a reaction from. When you run this forward, what did price do? Got very close to trading the level there, okay? And then it comes back down, trades through the level, under these lows, and then pushes away, all right? So again, if we do see price, it could rally from the current point where it is in the market, could trade higher, and then come back down, okay? For a deeper wipeout of these lows here, okay, this low here, into this structure here. That to me, if again, when you look at the relative volume in this instance, I think this leg played out last year because of the yen carry trade, okay? There's a lot of unwinding at that time. This was last August. Look at the spike in volatility, relative volume. Huge spike, aggressive selling. Not shorts opening, but aggressive selling. Why? Because any participants who essentially were long from here probably would have had their stop under here. That's what induces large orders being filled, okay? Not a liquidity grab, okay? It's large orders being filled, because if those large orders didn't exist, what do you think would have happened to price? Price would just keep coming through, whether it's a macro reason, whether it's an underlying news reason, okay? Whether it's whatever it is, a shift in policy. But why did the market decide to stop here? Is it because, oh, I drew this box here? This box has got nothing to really do with it. It's participants in the market who are interested in becoming buyers at this level. You don't know by looking at a candlestick chart whether this is going to hold or not, but you will get further insights by looking at the flow, looking at the delta, looking at the aggressiveness of this selling activity. And if you're seeing a lot of selling happening at this level, but prices not really able to break through it, that's your first sign. Then you want to see price reacting and pushing away from that level, so you can start stepping in and scaling into your trades. Then you're looking for these lows to hold. Then you know you're into a trade, okay? So again, when you think about this context that I've just shared, this for me would be a much clearer setup should it play out. Again, it doesn't have to, but for me, I would want to see something very similar play out once again, okay? Where price, look at this, it comes round, gives you a rounded retest off the high. Whether we start pushing back up and eventually come back down, maybe, just maybe, okay, we've got a thin level of inefficiency here, a bunch of single prints, I believe, or thin inefficiency. Maybe we just come down, trade into that 110, 109, push back up. That for me is the reaction that I want to see. Want to see absorption of aggressive selling, okay? High spike in relative volume. That's going to be the trade setup that I'm looking for, all right? And again, any aggressive shorts piling in, well, that will add fuel to an aggressive unwind to the upside. Very fast moves back to the upside, okay? Right, questions. Why would you long and not short? Why would I short into support? It doesn't make any sense. Why? I've shorted the highs. I've caught the meat of the move down. I scaled out 117, 116, 115. I did not catch this last leg down. My attention has shifted now to looking for longs because we are in a range-bound environment. And like I said, is this a trend? It's not a trend. It's just on the grand scheme of things, when you look at the higher time frame, I can appreciate that. Yeah, you know what? The monthly doesn't look great. I understand that. But at the end of the day, we could be range-bound here for the next 2-3 months. I don't know what's going to happen next. So if I'm going to short, I'm never going to short into a level of support. I mean, why would I? You're asking for trouble, essentially. How many times can you short into support and get away with it? The opportunity was here. The swing fail of this high and then hitting the backside. And essentially, that's essentially what I'm looking to do here. I'm not waiting for the confirmation. A lot of people will probably say to you, you know what, you want to wait for price to trade these lows here. Watch price push back up. That's your confirmation trade. I know if the order flow is telling me that there's enough absorption, I can get in much more aggressively with a respectable stop, whether it's under this low here or wherever it is, and I can structure the trade far more favorable. Instead of looking for a 3R, I can probably get a 4 or 2.5 or 3 or 4R out of the trade, as opposed to waiting for the confirmation. The confirmation for me is the microstructure on the order flow, on the footprints, on the DOM, on the ladder, not on the candlestick chart. The candlestick chart is just a compass. It just tells me zones where I want to do business. And that's something that I've always talked about over the last 2 or 3 years. I've always talked about, look, guys, there's a lot of stuff, there's a lot of things that I actually do behind the scene when it comes to trade execution that I probably don't want to cover because it's just going to drag on. Okay, there's a lot of concepts to learn. It's not difficult, but you do have to spend time learning those concepts and then getting the repetitions in via screen time. All right, so let's shift on to the market profile here. Let's look at, so I use a chart as a compass, but then I use market profile as context. Now, when you look at this from a market profile perspective, and just to gauge how many of you are familiar with market profile, the reason why I'm starting to cover this more often, because I'm on my streaming desk, and the fact that we now have TradingView, thankfully, who have incorporated TPOs, right? So when I look at this, let's just start off. Again, when I talk about top down, I start off on the higher time frame. So go to settings, go to the monthly chart. And when I look at the monthly profile here, just looking at the previous month, you can see that there was a large area of volume between 115 and 120. What did price do? We opened at the value area low. We traded above and took out the highs. We've come back down and filled in this inefficiency here. Okay, I think at the start of August, actually, we filled in a lot of this inefficiency. Now, this is a thin area. The question I'm asking is, do we trade this zone here, okay? Or do we find a level of demand at this zone here? Again, very confluent with that 111 to 110 with a very thin area or a low volume node, okay? Or LVN in this instance with a TPO. This is an area of interest. I need to see stickiness of price that if we trade into this level, I want to see a reaction from here. That's just based upon the monthly time frame. You can see where price is. We're at 114s. if I see, and again, the value area high and the value area low is still developing, right? Because we're in the current month. But if we start seeing price trading below the value area low into this zone here, what I'm looking for essentially is a thin tail. Very little time spent at this level with acceptance back above the developing value area low for a reversion trade back to wherever the value area high is going to be. That's on a monthly basis. So if there is a selling tail here, and I'm seeing signs of aggressive selling being absorbed into this thin area of price, that's going to be a level of interest for me. If we trade through there, then I'm stepping away from the trade. Okay, I'm not looking for a breakout trade lower down. Let's go into the weekly time frame. So the key things that you really want to be noting here from a trading perspective, and again, I tweeted about this earlier today as a segue onto this stream. Go ahead and look at my timeline. I shared about the pre-market or the pre-session planning that I do. One of the key things that I know is I look at the previous monthly value area high, the previous monthly high, the previous month point of control. Is it a naked point of control or not? No, it's not. We've traded that level. Where's the previous month's value area low? Where do we have some single prints? We've clearly traded those levels here, okay? Where are the thin areas or the thin pockets where price has not really spent a lot of time? And generally, like I said, you want to see stickiness. So again, if I see a thin selling tail, that's certainly an area that I want, that I'm interested in doing business in, okay? From a long perspective, looking for that mean reversion trade, because at the end of the day, like I said, I'm just treating this as one big range, all right? So let's then go into the weekly time frame. I'm just trying to keep the concepts very, very simple for you guys to digest, for you guys and girls, I should say. Now, when you look at the weekly profile here, what do you see? What's the first thing that stands out to you when you look at this? I'll give you 30 seconds for somebody to give me an answer in the audience. What's the first thing that you recognize with each of these weekly profiles? Yeah, which platforms do I use? I use TradingView, I use ExoCharts, I use Sierra Charts. I've yet to play around with ATAS or ATAS. Right, let's talk about the characteristics of market profile from a weekly perspective and how we can develop some sort of context. The whole purpose here is to develop context, okay? The candlestick chart is my compass for high time frame levels. Just looking at normal candle structure, the way the candles are shaping, the structure of those candles. But the market profile is my gateway, you should say, into understanding the actual context of price. Three things stand out for me here. If you look at the value area highs, look at the consecutiveness, one here, another one there, then there, again, and again, and again. So notice how essentially this zone here has been capping most of the price action, that anything above this level has been responsive in nature there, in the sense that we haven't seen initiative price action. What do I mean by initiative price action? Large players, large commercials are now accepting higher prices, that the demand is there to lift prices even higher to 130, to 140, to 150. Clearly that's not been the case. Buyers have been nowhere to be seen. Instead, sellers have been the dominant factor, which again leads us into responsive price action. Why? Because we are seeing rejection above these value area highs. There's not been any acceptance, and any time prices traded above this level, we've not really spent a great deal of time above there. Okay? The core of the volume here and here and here again, look at the value area high, value area low, where price has spent 68% of the time trading in these zones on a weekly basis. Okay? What do you then derive from this? Well, you have overlapping value. You can create a weekly composite. 1, 2, 3, 4, 5, 6 week composite there I'm not going to do that now, but again, these are the things that I look at. Is there a weekly composite that I can use? We've already noted the levels from the monthly timeframes, where the value area high and value area low and the point of control is, and essentially which pockets of thin areas or LVNs that I'm looking for price to trade into as a possible area that I'm interested in doing business. Now, when you look at the downside of this, where is price often reacted from? Again, single prints, okay? Thin areas, isn't that where price has reacted from? 112s. Poor lows, okay? Unfinished auction, which price has literally just taken out this week. And we've seen some form of reaction here. But should price find acceptance below here, then look at this gap here. We've got this node between 111s and 110s, okay? What I want to see, if price is going to trade that area, again, into this single print here, this is very important to take note of. I'll tell you why. Because, again, when you look at the subtleties that you don't see this on a candlestick chart. But when you look at the previous range consolidation, again, overlapping value. Value is overlapping. So you've got a 1, 2, 3, 4, 5, 6, 7-day composite, right? And I talked about this on the timeline in June, that above 109, 109.5s, if we get acceptance above 109.5s, we should see a push past this poor high, past the poor previous all-time high at wherever it was, 112, and we should start expanding out to new all-time highs, okay? That's essentially what I tweeted. That's what I was looking for, expansion or continuation. Once we get above this, once we break out of this composite. Now, if you merge the profiles here, you will see that composite. And again, this is what I'm doing. I'm trying to build a picture here of areas of context, high time frame inflection points in the market. So merging this with the previous profile. That's 3 weeks of data. That's 4 weeks. It's a bit slow on trading view 5, okay? 6 and 7, we'll just merge the other two. We now have a 7-week composite. We have the highs here. We have the value area high. We have the value area low. Okay? What's key here is, if I can just draw this out for you guys. Imagine you've got a range, okay? Here's your range-bound price action. We spent the best part of price, comes up from the lows into new highs and trades in here for a good few months, good few weeks. Okay? Above the level, deviation, responsive price action, late longs get trapped, they puke, price unwind to the lows, take out the lows and so forth. Classical range-bound price action. Okay, another fake out, which gets trapped. Price goes above the highs. Now, what's key here, okay, when you see something like this, it took out the previous highs. Isn't this going to start enticing short sellers? So short sellers are stepping into this, thinking, oh yeah, I'm looking for a potential mean reversion play back to the mid-range, or, for whatever reason, I think the highs are in, I think this is it, the top's in on Bitcoin. You're going to place your stops there, aren't you? And then you get this shallow pullback. And how many times have I said, when you've got a range high and price trades above it, after trading with that range for many, many weeks, we've retested the highs, we've retested the lows on n number of occasions, and then you get another push, shallow pullback inside the range. People are thinking, yep, underside short, stop at the high, or some people might be aggressive just above the highs and think, yeah, this is a deviation. You're going to get these shorts resting there. What does price do? How often do you see price break out of a range like this? When you see this type of price action, right, it's a very aggressive, impulsive move, an initiative move, okay? Participants are now ready to push the market higher and buy at higher prices. So what do you think has fueled the move higher? It's a combination of passive bids soaking any aggressive selling and then lifting the offers, And just like a stack of dominoes, these are going to roll over. So whoever had their stops here is going to become a forced buyer. And what happens to price? You get that fast expansion. And what do you generally find in terms of characteristics of this candle? You will find that this is a very thin candle, that not much volume has actually traded in this zone here. So when you're looking for those breakout trades, you will get these single prints that are essentially what you're looking for as price pushes away. You're really looking for a ledge as to where the single print might be for price to retest the level and then continue higher, because you're never going to get the perfect pullback. You're looking for those thin, inefficient areas where buyers are now having to raise their bid levels because they're thinking, right, I want to get into this market. I don't think it's going to pull back. And then you see passive limit orders at those thin volume nodes, at those thin levels where the single prints are retest, and then you get the expansion higher. Okay, so when you've understood that concept, when you see these breakouts of a range with high volume, you're never going to get the perfect pullback. Sometimes you do, sometimes you don't. But what you're really trying to think about is, all right, where is there a level of inefficiency? Or if you're an ICT fanboy, this is what's known as a fair value gap. Okay, when you look at the structure that we've got here, this was a 7-week composite. Price is ready to go higher. What happened is we opened above that level, okay? And I remember this very, very clearly. As we opened above that level, okay, this is, I wish I had the daily profile, but never mind. But go back and go to the chart and back test this on a daily profile, okay? Price breaks out, retests the single prints, and then just takes off again and goes even higher, okay? Because what you had on the day or on this week was this compression here. This is a weekly profile. This compression, it's like a spring. It coils and coils and coils. Then you've got to decide, all right, is this going to push up higher or lower? And eventually, I think we traded some single prints from back there or wherever it was, and eventually the market took off higher. So the point I'm trying to make is essentially when you look at price, let me get rid of all these drawings here. When you look at price now, and we've got this previous composite where the value area high is where it's coming in at 109s. We've got a level of inefficiency here, single prints. Have we traded this zone yet? So 2 levels of confluence that I would need to see hold should price trade this. One, I want to see this 7-week composite value area high hold. I don't mind price testing this level and holding it. But if we, for whatever reason, right, find acceptance in here and it pushes above and then comes back in again, then I think that increases the probability that we're going to revert all the way back to the naked point of control and potentially down to 104. That there is the downside risk scenario, okay? If we find a push into the value area high and we can't get back above it, or we trade momentarily above it, but it comes back down for a second close or acceptance, then we're probably going to revert down to that 104, 105 level, okay? That's the risk to the downside. But before that, we know that there's a possibility to long the market because we've refined our levels. We've made these key reference points. We have a 7-week composite. And again, when I'm looking for high probability inflection points, well, this was it for me. The fact that we've got the value area high, a 7-week composite value area high here. We've got these single prints here. Let me extend the line right. We've got these lows resting at price here. This was the ledge. You can see where the single print was, essentially where price reacted from. It doesn't get any cleaner than that, okay, in terms of precision. You're not going to see this on a candlestick chart, this granular level of information. But for me, this was the level that I wanted to long, okay? Now, when you move across in terms of, again, these are weekly profiles. If you look at where price is, we're trading 114.3. This is a thin area that we're trading into now. So for me, resistance, again, when you look at the previous 2 weeks value area lows, it's over here. So now this area for me is a level of resistance. That 114.7 is where we might see a level of stickiness, okay? If we can push above there, then I think there's a possibility, of course, right, that we go back up and trade into this naked point of control that we haven't traded yet, all right? Back to the weekly initial balance of the week, I should say, okay? So acceptance above 14.7 makes me believe that we see a rotation back to 17.5s. However, if we get rejection from this thin area where price pushes up, I then think that there's a good chance that we could get a move down, take out these lows here, potentially into this ledge here, or these single prints at 110, okay? That would get me interested. Now on the DOM, on the ladder, I want to see absorption at these levels, okay? That's where the DOM on the ladder comes into play, because I want to see how price reacts at that level. If I just increase the tick size to 1,000, okay, you can see the demand that is stacked in the books. In fact, let me do it to 2,000 ticks. Look at the book depth. I don't need a heat map to look at this data. Okay? I can see that the asks are somewhat stacked. We've got 126 between 114.5 and 114.7. Isn't that the area that I just covered on the market profile where there's an area or a level of a thin zone? Doesn't that make sense now? That, all right, if I'm going to see absorption of aggressive buying, then do you know what? For price to trade higher, we need to see aggressive buying lift the offers. So anybody who's shorting this down here is going to puke. But we really need to see two things. And that is, we need to see the offers either being pulled away. Okay, so just assume the intention is there, but as price approaches that level, is the intent there? Do those offers actually stick? And does price trade into them? And should it trade into them, are we seeing aggressive buyers piling into that level and then they give up? And then aggressive sellers who have filled their orders are now hitting the bids and taking the market lower down, potentially targeting these lows into that volume area. Okay, that is how I think about markets. That is how I think about trading. These are the levels that I'm looking at. 114.7, are we going to see a rejection or are we going to see acceptance above the level? If so, then the probability increases to 117.5. If not, okay, if we see the market absorbing any aggressive buying at these levels here, then we know that there's a decent chance we could get a reversion back down. So when you look at the book depth, you think, all right, there's a shit ton of stacked bids down at these lows. Now, what would fill these bids? Would it not be the case where all those stops resting under this low here and the low all the way wherever it is, okay? Let me just increase the time frame of this. So you're seeing these stacked bids. Are these genuine? Or is there going to be enough selling pressure to absolutely just chew through these levels and take price lower down? Okay, that's what I'm looking for now. Because when you look at price here across the line, chances are, if you've longed this, come on, let's be logical here. If I'm longing this, right, chances are I'm going to probably place my stops under here. Because, all right, not myself, but I'm just thinking about how other participants are likely to place their stops. Others may go for a wider option and say, all right, I'm going to put my stop here and actually build a position. So if I'm looking for a swing trade, I'm wrong below this level over here. I'm looking to scale into positions all around here. This is how a slightly more higher time frame, larger participant may think about price if they're looking to build a position. Whereas a trader who's looking to trade it from one level to the next, their stop is going to be here. They've executed here. They may be looking to target this level here, right? But the point is, all these stacked bids, you want to see signs of absorption that if these longs have their stops under here and here, that is what's going to cause aggressive selling into that 111, 110 zone. Okay, there's 110, there's 111, all the way to 112. So 112 to 110 is the area that I really want to see aggressive selling being absorbed, because if this can't hold up price and we don't see the bids get replenished lower down at 109s and 108s, okay, this can change obviously day by day, hour by hour, session by session, tick by tick. We might see some iceberg orders replenish the bid as they get filled. Just because these get chewed through, we might see another 50 million appear here as this gets traded into. Then another 50 million gets traded into, and they keep replenishing the bid. That's a sign of absorption through icebergs. Okay, so these are the subtleties that I'm looking for, such that if price does trading to this level, I then have a level of conviction that, all right, we've seen a high level of selling volume here. Okay, I'll give you a classic example. If you look at this, look at all this aggressive selling. We've had 5 million, 6 million, 9 million, 4, 16, 4, 3, positive delta, all this negative delta, all this aggressive selling, 24, 21, 25, 23, 5, 6, 14, 16. This is very aggressive selling. For all this effort and momentum, why was it that price couldn't trade any lower down? Okay, it got absorbed in the books. And then look at where we close. We close back above. So all these trades are trapped. What happens thereafter? We spring back up. Okay. Rounded retest of that level. And price pushes higher. Okay. The rest is history. Okay. Look at that. One final stop run. So anybody who's got their stops tight in there, again, what do you see? You see aggressive selling. Understand that this aggressive selling isn't necessarily shorts opening. It could be longs puking their positions, other passive players getting filled, and then the market going the other way. So these are the signs that I'm looking for. A heavy, aggressive sell delta at the lows to give me reasoning to believe that, all right, you know what, we could see a reversion. Here's another example. Okay. Aggressive selling at these lows. What did price do? It trades the other way. Okay. The fact that we had so much aggression at these lows, price came back down one more time, sellers really tried to push them down, but the fact is that we had all this aggressive selling, and what did price do? It actually went on to make a higher low. This is your sign in the market that when you sometimes get these rounded retests, that all this aggressive selling has been absorbed. The fact that there's more aggressive selling here and we've made a higher low, that's a sign that, okay, start pushing away. That's probably the low end for the time being for a rotation back up. And when you think of structuring the trade, your execution, you wait for the candle to close. On the next candle, you're pushing away. You can execute at 113 with the stop at 111.8, and you're targeting these highs at 118. That's a very good 3-4 hour trade there in itself. Okay, a rotation back up, 3-4 hour done. So that's kind of what I'm looking at, okay? Even on here, you can see where there's a thin area of price action. And again, isn't it confluent with this SR level, okay? Support, 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 break through it. Again, why did we break through? And there's very thin volume here because these aggressive stops under here fuel the move lower down, okay? It's a one-way momentum. So this area now, that 14.6, 14.7 is a key area of resistance, confluent with the stacked asks that we've really got to get through this level. Even up to 115.1, there's about good 250. And this is just on Binance Futures that we've got to get through this level, because if we don't, then there's a good chance we could see a retest of this level and another leg lower down. Okay, that's the risk to the downside. But with the downside, then that brings about an opportunity to think about, all right, you know what? I think I could be in with a trade potentially somewhere here, okay? We'll refine it as we go along, or you should refine this as price trades into those key zones, all right? So that was a quick overview of candlestick charts, market profile for context using the monthly, the weekly, how I look for trade execution using the DOM, the ladder, footprints. Again, some of this may be information overload. But what I find it's given me over the last 3-4 years is, again, a level of execution and conviction in the trade from a trading perspective. Okay, I'm not talking about investing in Bitcoin and buying spot Bitcoin. That for me is purely positional trading. I don't use any of that information. I don't use any of this information when I'm looking to buy spot position. Spot position for me is a higher time frame contextual play. I'm looking to build a position over many weeks. This is purely for futures trading. All right. So now that we've understood this, obviously there's a daily TPO as well. What's the daily telling us? Again, you can merge, on that previous weekly, you can merge those profiles, but if you look at the daily here, can you see that 14, this thin area where we're currently trading? Okay, we've really got to get above this level here. There's a naked point to control there. Is this a case of, all right, we pull back and go higher, okay? You've got that sort of shift in structure. Or is this a case of, right, reject from here and we get another move down into Friday's data, okay? Whether it happens or not and we take out these lows, that for me would be a very good trade setup, all right? If I see what I need to see from a microstructure point of view, all right? How can you refresh the DOM? Basically, you can refresh it by right-clicking. All right, let me just right-click here and reload it. And when you reload the DOM, you're basically refreshing all the data here, essentially. All right. I normally have two DOM ladders up, one with 1,000 tick and one with 400 because of the volatile nature of Bitcoin. So I have 400 ticks and I have 1,000 ticks. But for the sake of this stream, just to show you that I don't need to use a heat map, I don't need to look at order book, skew. It's all here. It tells me everything I need to know. I can see where the depth is. I can see where the asks are. I can see where the bids are. I can see the today's volume profile. Okay, that's more than enough for me. So all those other tools, there's many ways you can do it. Some people prefer to look at 2.5%, 5% skew. That's fine. Everything that I need to see is here. I guess the advantage of 2.5, 5.5% skew is that it gives you aggregated data. But at the end of the day, if I'm trading on a futures exchange, I'm looking at the futures data. All right, so we're at 1,000 ticks. You can see today's profile. There's a value area low at 113.1. Today's value, developing value area high is at 14. We're about to trade into that slight level of inefficiency. Acceptance above 115 and any backtest and continuation opens the floodgates to trade back up into 117s, okay? Because what you've then got, if you think about it, is that's one range, that's another range, that's another range. Are we going to trade this lower bound of the range, or are we going to shift structure, pull back, then you're looking for continuation higher, okay? That's probably a day trade setup that I'd be looking to take, okay? But again, this area here now, this thin area is the sticking point. We've got to get acceptance above it to potentially start working our way back to 117, 118, all right? So everything that I've just showed you, you won't see that on a candlestick chart. But I've shown you from a historical context why price has reacted from certain levels, okay? Right, let's move on to Ethereum. ETHUSDT, I'll just spend 5 minutes on ETHUSDT. I think for me, I'm currently long on Ethereum. I got an average fill of 415, 4150. For me, again, simple play, looking at market profile, we traded below these lows here into this level of inefficiency, single prints, call it what you want. Okay, this was the impulse. You can see this on a 4-hour chart, even on a 1-hour chart. Where did price impulsively break out from? From this level here. Okay, that's the fast move up. What did we do? We filled in that inefficiency, traded into this support zone. Price is pushing away. The question I'm asking myself here, is this the low on Ethereum, or just as Bitcoin is at 14.4, 14.5, these highs on Ethereum, this level here is key for me, okay? Because if we're going to come back down and trade into the low 4,000 level for one last push before we get a reversion trade higher, confluent with Bitcoin, are we going to see something like this, where price clips these highs, comes back down for one more retest, okay? Whether that's a higher low, okay, or whether that's a lower low, remains to be seen. And then I would suspect that there's a very good trade setup on, because, again, something that I covered on yesterday's stream, if I just remove all my levels, and let's just go to the daily chart, let's look at context of price. Okay, so again, I'm refining my levels from a candlestick chart because I get a better view of the price action. So when I'm looking at the candlestick chart here, again, when you look at price, when we traded into the all-time highs, which is here, where did we pull back to and get a reaction before we saw a move back up towards the near the all-time highs? It was this level here, wasn't it? So when you've sold off and you found a level of support, buyers are stepping into the market, takes out the stops, trades higher into the supply zone, okay? Look at the wicks around this area. Okay, eventually price rolls over and then you get the big expansion below and continuation lower down. This for me is that key trading range. There's my mid-level, okay? Using these levels, let's run it forward. Resistance. Going to use this as a reference point. Resistance. Resistance. And again, using that previous reference point. Now, if you think about what price is doing here, it keeps tapping away at this level. When you think about a brick wall and you've got a hammer in your hand and you strike the brick wall, what are the chances that you're going to knock the brick wall down after one strike? Probably relatively small, right? Considering the strength of the brick wall. That's how I view resistance. So the more attempts that you have at breaking resistance with that hammer, or in this instance, the more attempts price takes at breaking through resistance, eventually will push through it, okay? Now you look at where price has reacted from. It's towards that range low. Where are the highs? There's the all-time highs. As far as I'm concerned, from a price action perspective, this is what we're trading, okay? None of this bullshit, oh yeah, Ethereum's top, that's it, we're going lower down. I really couldn't care about what other people's opinions are. And you guys shouldn't really think or care much about what my opinions are if I think we're going to go to 7,000 or we're going to go to 1,000. It doesn't matter. All I care about from a trading perspective is, right, supply zone, demand zone. If this is resistance, look how everything is starting to line up. If Bitcoin gets rejection from 14.7 to 15K, and Ethereum trades where? Into the mid. Rejection, stop above the high, you've got a chance that we could revisit into a higher low, or remember what I explained previously where price traded? Again, go back and look at price action. Look at what happens. Let's replay the data. So we know that we've topped out. We're looking for some form of range lows to be established. Okay, we're not trying to catch a knife. Do you bid this? Do you bid this? Do you bid this? We don't know. We just don't know. Okay. But we know in hindsight where this key level is. Price comes in, trades that level. Okay, you've got a level of demand here. Again, using order flow and footprints, we probably would have seen aggressive selling at these lows. Now, you tell me in the audience, right? If you're longing this here, you've just got into long. Is your stop safe below here? What probability or certainty can you tell me now that the market is here, you've entered here? What chance is there of your stop getting run versus price hitting this level first? Which one are you going for? Do you know for certain what's going to happen next? You don't. All you can do is manage your execution. After that, you've got no control in terms of what the market does. You have to accept that level of variance. Whether price comes back and takes these lows, okay, into more passive bids which soak up price, or if there's no demand there and aggressive selling comes into the market, we're going much lower down, okay? You don't know that by looking at this candlestick chart. But you're really looking for this mid-level, aren't you? From a trading perspective, right? If you've got a long off here with a stop just below this level here, that's a fairly decent 2.5 hour trade. Potentially, if you really want to swing for the fences, go for the highs, 4.5 hour trade. That's all you're bothered about, okay? What happens next? What do you think happens next? Let's run it forward. The key thing to remember here is when we look at price action, this was a fairly aggressive move down. So you're going to get a level of inefficiency around here, okay? There's one level. And really what you're thinking about here is, all right, if that's one level there, if we can push up, I'm looking to take profit around here, because the minute we get back inside, there's a good chance we could come back down and take out these lows, right? Or we make a higher low and push back up again. Because we are in a range-bound environment, are we not? That's your cue to get out the trade. Because you come all the way back down for a higher low. Now, whether you're waiting for this higher low to get back into the trade or whether you're looking for a sweep is entirely subjective to how you trade. But what does price do? Look at that. Look how much time we've spent in this area. Now, just imagine that you've caught this. You're very bullish. You're thinking to yourself, you know what? I'm going to swing for this for the highs here. Maybe you're fortunate. Maybe you put your stop down here. Maybe you get away with it. But you've just round-tripped all your gains. And knowing your human emotions, you're probably going to panic sell this at the lows here, right? So that's why, over the coming weeks, I think it's important to really think about price at this key resistance level. Just look to trade price as a range, okay? Clearly, we've shifted from trend into a form of consolidation. Now let's run it forward again. Look how many times we've tested the range lows. Now we're getting a push above the mid-range again. Now we've traded these highs, the upper percentile of the range. We've just took out this high here. Assume you've caught the bulk of the move up. you're at resistance. Stop waiting for the swing fail. Start thinking about, all right, I need to start taking some partials off. And where do I not want to see price trade? Really, I don't want to see price come back below this level here. We've had a reaction and it's rallied. If this level's going to hold, then I really need to see this hold. Otherwise, I need to start taking my profits or scaling out. Maybe I take 1/3 off here. I've got another third there, and maybe I've moved my stops somewhere over here. Rest is history, okay? Trade the upper percentile and the lower percentiles of the range. You can avoid all this chop by taking sub-shitty trades at these mid-levels, okay? You're going to get shredded to pieces if you're looking to play those swing type of trades from mid-range to range high or mid-range to range low, unless you really know what you're doing, okay? So now that we've established that price has been range-bound for the best part of Tuesday the 16th of November all the way through to 4th of December, that's 2 weeks. Why do we not think that price could do something similar, right? Given where price is today, okay? This is where we are today. So again, very similar price action. We've got this key level here. Let me just clean up my chart. There's that level that I marked out from the previous all-time high range, local range low. There's a previous all-time high, local range high. Previous all-time high, local range high, mid-range. That's your range lows now, okay? If we run these highs and we get a move back down, I'm looking to become a buyer of Ethereum. Well, I'm looking to take another long. In all honesty, I've started scaling out of my position. I was chatting to TX that I've cut my position. In fact, I've cut most of it. I've taken profit because I've caught the move up, okay? So I'm thinking to myself, all right, we could push up into the mid, but if Bitcoin rejects from 14.7, 14.8, and it goes for those lows, because ETH is showing relative strength, are we now likely to see, okay, a lower low, or are we going to see a corrective move back down, respect this level here into a higher low? You're looking for aggressive selling. Once price pushes away, you can start scaling in, okay? But again, you're just looking for the mid. If you can get above the mid, then hopefully we can run for the highs as well, okay? Break the trend line. That's the trigger, game on, all right? Fast move up is what I'd want to see. The problem that we have, again, just like Bitcoin, if Bitcoin gets below 109s, wasn't this a previous trading range that we had on Ethereum? Between 33s and 39s. Then we're in contention for trading this range here, okay? This is one zone. This is the next zone. If you're longing this from anywhere here and price is coming down, you've got to get out the trade. Because you can always step back in if we see acceptance back above the level, then you've got another stab to go for the highs, okay? And this is just shorts, late participants puking their positions, getting trapped, or maybe if those early longs have given up, and then eventually the market reverts back to the mid-range and then to the range highs, okay? Very similar concepts as to what I've just covered on Bitcoin. It's all one big trade as far as I'm concerned. But I've shown you the levels that I'm looking to trade, okay, over the coming days, all right? I don't know if this is the low. It could very well be before we get a move higher. There could be a chance we come back down. The whole point of trading is not to predict, okay? Your job is to react, but react with a plan ahead of time. Which levels am I looking to trade and why? Last few minutes and then we'll call it a wrap on the stream. But again, when you look at Ethereum, purely from a market profile view, okay? Remember what I said about how Ethereum came back down and traded this inefficiency. Well, look at where we pretty much bounce off of. $40.54. That's not really a single print for me because it's only one TPO. Actually, it's two TPO, so it does count as a single print for me. Okay, but essentially, if we just box off this zone here. And you've got this cluster here where the IB range is. This is really your invalidation point. You don't want to see ETH really getting below this low here at 39s, okay? Where did price come into? Pushes up, trades the highs, comes back down. Straight into that single print, okay? Yesterday and today. We took out yesterday's low and we've pushed all the way to 43s, okay? Now, what's important here, before I wrap up, we've pushed up into 43.60. We've taken out yesterday's high. We're at the value area high from the previous day before, right? But what I want you to really pay attention to now okay, that's the previous day value area high. That's yesterday's value area high, okay? But what I really want you to pay attention to is what? Is this level here. This thin area of price. That if we happen to push up into this and we reject confluent with Bitcoin, then we might see a higher low or another lower low over the coming days or weeks, okay? The key for me in all of this is essentially this zone here, okay? This has to hold for me. So now that you've understood the context, remember these numbers here, 44 to 44.50, okay? And then this area between 40.50 and 39.80s. 44.50 here, okay? Almost confluent with that mid. 39.90 to 40.40. That's 39.90. There's the IB range in here. This is the level that I want to see stick, okay? Below here, you know that we could see a deeper retracement, okay? So this is it now. Almost at your mid-level, give or take. You've got a nice low here, such that if price comes back down, takes these out, sticks here, you've got a nice invalidation to get long back towards the mids, okay? When you think of that from a trade structure point of view, let's even do it from on a TPO chart. Stop just below the IB or the previous value area high. So again, you've got the value area high just below. Now, I'm not looking to blindly bid the level. I want to see if price does come lower down. Okay, we've traded this. We do this. Okay, essentially, that's my execution. That's my stop there. What's my structure of the trade? I can chalk off a 4-hour trade. If you can give me 2 hours a week, I'll be very happy for the rest of my life, trading life, okay? This is a subtlety that you can achieve when you have full understanding of the context. And this is just a quick high overview. I'm trying to keep it very, very simple. I haven't even talked about some of the other aspects of market profile or how I use the IB range or looking at tails, okay? This is an example of a tail here. But you can see the granular level of information that you can get and how you can trade that. If we Or even if we reject and we don't trade these singles up here, and we reject lower down and take these lows, I'm targeting those single prints up here as the magnet for price. I normally hit market for crypto. I don't do limit orders. I generally market in and then I chase, limit chase, okay? Because I don't just have one entry, I build a position. We'll talk about risk management and position sizing in a future stream. But I've essentially changed the whole concept and the way that I execute trades, okay? And I'll talk about that in a future stream. Acceptance for me isn't time-based, it's non-time-based. I don't really look at a candlestick chart and say 1 hour, 5 minute. I look at context and flow. It's non-time based for me, okay? Any final questions and we're going to wrap up the stream, all right? I hope you found this educational. I will try to do these once a month. If this type of stuff interests you, let me know. Please let me know in the comments. If you're not interested, we can always go back to Classic XO and just look at candlestick charts, okay? We can always do that. And if you want to keep it really simple, okay, where I've just showed you a 4-hour setup, we can even do it like this, just to make you all happy. There's the highs, okay, on price. Here's my 10-foot wide weekly order block. This is bullish. This is a bullish order block. This has got to hold. You really want to see a price hold this level. You might want to long from here, put your stop down here, and target these highs, and you might get a 1-hour trade, 1.5-hour trade. All right. Come on, guys. Seriously. Bullshit. That's from 3,400 to 3,900 on a weekly order block. And where do you even bid it? Here? Here? Down there? You know? You need a far greater level of granularity than this. Even on a daily time, where do you put it? You know, which level are you using? This one here? Or are you using this SR level here? It's pretty much guesswork, isn't it, at this stage? Which level are you bidding? All right, so I hope that's been insightful for you guys. I hope that helps. And hopefully, I wish you all a fab week ahead and a very good remainder of August. I'll probably try and do a stream in September. For anybody asking to sign up to the charity mentorship, please do not sign up to any mentorship. It's coming to an end. All proceeds will be given to charity. I don't think I'm ever going to get time to do one again. But as I've promised the members in the group that I might be looking to do private streams from either from September or October through to December. Again, I've never run a paid service. I've never run a paid group. So, which I'm, like I said, I'm going to be running these private streams. So if people are interested, then I'm just going to open up an X amount of spots if people want to sign up and join. Again, it's not a paid service, not a paid group. I'm not asking you to make a payment, but we'll try and figure something out. Right? And then that's going to be it, essentially. But that's only going to be ad hoc private streams. It's not going to be like, hey guys, I'm doing 2-3 private streams a week. Sign up. Here's a fucking pay link and pay me $100. I've never charged anybody shit. Right, folks, wish you all the best. If there's any questions, if there's any comments, please leave them at the end of the video. I appreciate your support and the love and all the regulars. Like I said, I'm just a human being who enjoys trading. This is my passion. if I can share my knowledge with you guys, I get to learn or teach myself twice, to educate myself twice, and to share with you guys my own journey in trading. Okay, this is what I do for a living. This is my passion. And if it inspires other people to become better traders, then that's more than good enough for me. I don't want anything from anybody out there, all right? God bless. Wish you all the best. And we'll catch you in September. Take care. Thank you.